probably lean on Malika a little bit to let us know how we actually.
We'll cut that part later.
It was your picks.
Hey people, so our plan with this channel is just to come on here and be completely 100% honest with you guys every week and telling you what moves we made and whether or not we made money or lost money with those moves, and also make some predictions for the following week about what we're going to buy so that we can check back with you and follow up about whether or not it was a success.
So, hey guys, my name is Catherine Cat Dunham, Cat for short. I am a New Jersey realtor and sales associate for Coldwell Banker. My style of investing is more long-term holds, but I'm starting to also get into option trading. And pretty much today I'll be kind of giving you some pointers and just some idea of what I've done in terms of what's worked for me with long holds and what I've been investing in recently, what I plan to, or what I'm looking to invest in, and how I plan to add to my position.
Nice.
Hey, it's your girl, Kristen. So I am a recruiter by day, and well, I use trader by day also, but I make my living as a recruiter. I started trading a few years ago actually, but I didn't take it too seriously. I lost on a few big trades, so I kind of stopped. I didn't do too much studying back then, but
Yeah. But now she's doing much better, and she's got lots of advice for you guys about what not to do and what to do.
How do I do that? wait. Can you see me? Yeah, now I see you.
Okay, so my intro video got messed up. I am a software engineering sourcer. I'm from New Jersey. I studied electrical engineering at Carnegie Mellon, and I like options trading. It's time for Options with Malika.
Thought was a good idea was, or at least I thought was a good idea, was to go and look at some of the stocks that, looking at their 1-year chart, the price dropped around the time when the coronavirus stay-at-home orders kind of began, which was late February.
Dun, dun, dun.
Our theory is that a strong name like Boeing, which is a company that you would expect to rebound at some point once stay-at-home orders are lifted and they can produce again and sell again, they will go back up. So we could try to grab it at this point down here when it's low. Even at this point, I'd still say it's a good grab. And hopefully it'll go back up to around this high.
So as you can see here, I have an option for Boeing, which has gone up $60 just in the past week. So it's already made me hundreds of dollars in a few days. Actually, thousands of dollars. Winner! So let's go more in depth about options. Here's another one of my picks. Dave and Buster's. I grabbed an option for this last week. I think it was Thursday. So it's only been a few days. And I've already made, as you can see, $225 on this option. So this is another coronavirus survivor, I guess you could call it. They obviously were shut down, and now there's hope that there'll be reopenings. But rather than talk about what I've already done, let's actually jump in and grab something right now that you can grab as well, so that you can do this with me and hopefully make a profit, right? So if I were going in right now to buy an option of Dave & Buster's, I'm going to try and grab something below that $46 high point that they reached back in February before coronavirus. So maybe look at this, how cheap you can get $88. So I'm not going to really talk about how options work in this video. If that's something you want to see, comment below and we'll do a separate video about that. In this video, I'm just going to talk about the options that I bought and the options I'm planning on buying and what kind of profit I'm making off those choices. So you can look at this graph. You can see right around when the coronavirus stay-at-home orders took place in late February, they dropped from $46 down to where they are now at $19. So let's click on trade. Click on trade options and take a look at how much our options cost. Now, if you're like me, as I say, balling on a budget, you want to get options so that you can make a greater profit with less money, right? Rather than buying 100 shares of Dave & Buster's, I can just buy an option, which you can see the prices here. They have some for $100, $200, and I'm going to make that profit as if I bought 100 shares. Okay, so the key here is I'm kind of guesstimating that things are going to start doing better within the next few weeks. States are reopening. So I'm pushing this out to October. So looking here at the October options page for Dave & Buster's, I'm eyeing that $30, $35 strike price because we saw that they were at a high of $46 right before coronavirus hit. So we don't want to go above $46. So looking at the 1 week graph, you can see that Dave & Buster's went up $6 in the past week. So if I want to try to extrapolate, I might say that they go up, on a good week, they go up $6 a week. It would take them 3 weeks to go up to that $35 price. And since that option was for October, obviously that's more than 3 weeks away. I think it's reasonable. So looking at the options for October here, I look at the $35 strike price just because I like the price of that. It's at $238 right now, meaning it would cost me $238 for one contract with a $35 strike price. And according to my technical analysis, I think that's very reasonable. I'm going to grab that right now. So then my plan is that if I grab that contract right now at $238, in a few days, as the price of Dave & Buster's goes up, the value of that contract will go up, and I'll see that in my account. It'll say, you're up $50 or you're up $100. And I'm going to then decide when I want to sell the contract. It'll be worth more at that point, so someone will pay more for it, and I will make a profit. And yes, you heard me correctly. I'm planning to sell the contract. I'm not planning to execute it. Whoever buys it can execute it if they want to. I don't have that kind of money. Anyway, so now if I go ahead and select that, you see it checked off there, and then I'm going to hit continue, and it's going to tell me the price. So once I hit continue, I now have to enter in the number of contracts, which is 1. I have to enter the limit price, which is 2.4. That's the maximum amount that I am willing to pay for this contract. So you can put whatever you want there, but someone has to accept it. So if it's too low, no one's going to sell the contract for that price. Then you will see this, as I mentioned before, once you multiply that 2.4 times 100, they're telling you you're going to be paying $240. Then they even give you a nice little message here telling you you're paying $240 for the right to buy 100 shares of Dave & Buster's for 35 cents per share by October 16th. Now, when you go ahead and click submit, you will be paying $240 for that contract. So once you buy this contract, you'll see it in your panel. Robinhood will tell you how much money you've made on it. If they tell you, you're up $100, in this case, that would mean that the contract is now worth $340 because you originally paid $240 for it. So make sure you know how much it's worth when you get ready to sell it. At the rate it's been going up, I think it would probably take you a few days to make $100 off that option. Literally like 2 days. As you can see here, my option for Dave & Buster's, which is PLAY, is up $50 in 1 day. That's the daily return that it's showing on the right side. Here are 2 more picks that I made with similar 1-year charts where you see that same drop at the end of February, and then they're starting to rebound. So I went ahead and bought options, and you can see at the bottom there that I've already made some money on these options just in a few short days. Same thing here. If you see the option at the bottom, you can see my return for a few days, less than a week. Time for long holds with Kat.
And I added Bud, BUD, which is Budweiser, back in March when the stock market crashed and we were dealing with everything with coronavirus. I picked it as a long hold because I believe in the company. I thought at the time it was severely, underpriced. I bought in at about $37. End of day Friday, it was at $57.18. So it's already moved a lot.
Here's their 1 month chart for Bud. Time for day trading advice with Kristen.
Let's talk about some moves we made on Friday. We could start with something we did that didn't work out and something that did work out.
Okay, I'll definitely talk about one that did not work out for me.
Go for it.
Genius Brands. And
all right, let's talk about it.
Yeah.
So the 1 week chart I'm looking at right now, all the way from 256, and their high was 1173.
Right.
So
from June 1st to June 4th, it looks like.
Yes, and now they're currently at 609. So obviously they got a lot of hype. That's like a huge growth in such a short period. It was way too late when I invested my money. So I bought in on Thursday morning at 9:16 when it was pretty high. I bought into the height, and Genius is moving, Genius is doing this, it rose like crazy. So I believed in the hype, I got caught up, I bought in at 9:16 for 70 shares. I am currently down $215. So yeah, that clearly didn't work out for me, and that's purely a lesson learned.
Dun, dun, dun. So how did Kristen end up for the week? Well, she actually had some pretty good picks too, which she did not film, but she picked Zoom, which reported their earnings last week, and they shot up the following morning. And she made a couple hundred just like that because she had an option for Zoom. So I wanted to quickly talk about about earnings really quickly. You can get a copy of the earnings that are coming out this week, and you can get this chart from Earnings Whispered if you just Google that. I got this from their Twitter account. It shows you the companies that are the most anticipated companies that are going to be releasing their earnings report within the next week. So we're most interested in Adobe, Chewy, and GameStop. Chewy, by the way, delivers pet food, so I think that might be something. GameStop is a little bit risky because the actual stores are closed, but I'm assuming as a non-gamer that people are going to order online. So what we've seen in our experience, what works best for us is to grab the stock a couple days before the earnings report and ride that anticipation up. The stock price is going to go up as people are anticipating the earnings report, and then drop it right before the earnings report comes out because the stock might actually drop once the earnings are released. That's not going to be foolproof, but I think it's the least risky. And that was the June 8th investing with Malika, Kat, and Kristen. We would love to hear from you.
I hope we're completely just using this as a trial run. Video is clearly trash.